Hi everybody, how is it going? So this is going to be tutorial number 10 for the tutorial series. And in this video, I wanted to talk about laddering. Laddering is a way to maximize your profits and to also minimize your risk. And I use it all the time. In fact, it's one of the key components to my scalping strategy, where I'm always reducing my risk by reducing the amount of exposure time I have in the market. What exposure time refers to is how long you are in a position. Basically, how long you're exposed to the market, right? Every time you're in the market, there's risk, right? There's risk of it going down or going against you in general, whether you're shorting and it goes up or whether it goes down if you're in a long position. Now, what laddering does is it's a form of, you can almost call it like hedging, right? Hedging traditionally means of pretty much ensuring against your bet, right? You put your money somewhere else to ensure that you're going to be able to take some small gains just to reduce your risk in general. So what I always do is I try to sell the top and then I try to sell on the bottom. This is going to be a fairly short video. Now, let me give you an example. Right now, we're looking at a Neo chart, okay? We're looking at a Neo chart. Now, let's go to like a 30-minute chart right here. 30-minute chart, and we'll also get the RSI up here as well. Now, we need to establish some rules for RSI. If you guys remember, for my bullish zone for RSI, we're generally looking at 40 and up, right? About 40 and up. Actually, we can say 40 and up. So right around here, or we can call it 60 and up as well. I generally like to think it's 40 all the way up to 80 plus, and that right there would be my bullish zone for the RSI. Now, the moment that it breaks this bullish zone of mine, so under 40 is the moment that I'll basically sell it. But until then, I'm not going to sell it and I'm going to ride the wave. But what I also do combined with that is I add another rule of mine in here around the 60 range, right? Around the 60 range right here. And the moment, guys, that it's about to break there or come close to it, or I feel like it's downtrending. So for example, if you remember from my RSI video, the moment that you see bearish divergence, such as a lower high, or even right here, lower high, that's a really good time to sell. Now, let me give you an idea, first of all, of what laddering is, okay? Let's say you took profit. Let's say you bought it down here just as an example, and you entered a long position right here. You entered a long position right here. You could yield a possible 65% for riding it up, right? And let's make sure that we document this as well. Let me just get my spreadsheets up here. Okay, so let's say right there, you entered a position. I'm going to do on the other screen, then I'll bring it over. You entered a position at, where would this one be here? I'll get all the information up here. You entered a position at 29.1283, and then you sold it. We'll just say 100 coins just to make it easy, okay? Actually, it's 1,000 coins. A little bit better. 500 coins, that's better. And then you sold it at 48.5014, okay? Okay, maybe that's a pretty big number. I don't want to do that. It's not relatable. Okay, so let's say you entered a position here, your entry price at 29.1283, and then you sold it, for example, at 45 at the very top. We'll just say at the very top. Or that's not realistic. Realistically, you probably won't get the top. Let's say you sold it at 47.2755. 47.2755. Now you would make a profit of $1,820, and we'll write this down, okay? So we're going to go case one. This is a profit of $1,000. What was it? $812, okay? $812. Now that to me is a big risk. I consider it as a big risk to hold this long, right? Because you're banking on it going higher and higher and higher. Now let's say we made a green candle or a green bar that represented how much profit that was. This whole green bar right here is a representation of your profit, okay? For that particular one. Now this is case one. Now let's say there's case two. This is a bigger risk, right? Because you don't know if it's exactly going to go up there. Now the case two will be you actually sell it right here, okay? You sell it right there, and now your entry price is the same thing at 29.1283 or whatever, but now you're selling it at instead 39.68093, okay? So now your profit is actually 1,052, and I'll write this in as well. This is your case two right here. Case two, your profit is 1,000. I've got a bad memory today. 1,052, right? So now you've actually sold it right here. This is going to be called profit one. Your profit one is now $1,052, right? And the cool thing about being able to sell here is if you do expect a bigger uptrend, you're basically selling off to take profit. And when you take profit, you don't have to sell everything you have. You can sell a small amount. You can take 50% of your profit, 25%, 75%, whatever you feel comfortable. But the important thing is that you are securing some of those profits versus case one, where you're actually riding it all the way to the top and hoping for the best. And you don't know how high it's going to get, right? You really don't know. And it's also a bigger risk to you the longer you are in the market. Now, let's say we drew a green candle that represented your profit for here, okay? You drew a green candle like this. This is your first one right there. All right. And now let's say you do believe still it is going back higher. Now let's say you actually entered another position somewhere. You entered a position somewhere like right there after you do your Elliott wave count. Now your risk is actually reduced. You can set a different stop loss, right? For if it goes lower. And then now let's say you actually sold it somewhere up to the top again. So for the other case, we sold it at, I think, like 47.5 or something. Now let's say you sold it there again, okay? So you've now entered another position because you do believe it's going to the top with the same amount of coins, but now you're entering at 36.7763, and now you're selling at 47.43. Well, now you're making another 1,062 profit, right? So you're making another 1,062 profit to 1,062. right? So what do those equal combined? Those equal combined profit is now is equal to $2,114, right? Now let's say we took a green candle as well and we drew a representation of your profit, okay? Now what's a bigger green bar, guys? What is bigger? I know it's not hard to answer, right? Clearly because wave two, or sorry, not wave two, clearly because this green area is much taller. If these were representations of numbers, this profit is actually much greater than that profit, right? So we're talking about, even in a visual representation with bars, these bars are bigger than this bar is bigger than this bar here. And also the numbers are also more as well. We're talking about $2,114 profit versus a $1,812 profit, right? So which case is better, guys? Riding one gigantic long wave, okay? One gigantic long wave with more risk and more exposure in the market and actually less profit, or quote unquote hedging, right? You can hedge, you can take some off the top, you can insure it, you can reduce your risk, whatever you want to call it. I'm just using loose terms right now, so don't take it to heart. Or what's better? Selling off some at the top when it reaches a peak, right? You reduce your risk, you're guaranteeing 100% of the profit. And if you are still bullish, right, then you buy back in on a dip. Even if you bought in a little bit of a higher price, you're still buying at a lower price than what you originally sold it for. And that is the key thing. And securing my profits. And not only am I securing my profits, but I'm also guaranteeing that there's no risk. There's not as much risk in the marketplace for me. And because there's not as much risk, I'm also not having as much exposure as well. So overall, it's actually a win-win situation, right? So this is what I wanted to talk about. So I want to give you guys clear signs of when you would be selling. So just to give you a quick example, here you would be selling when you see a bearish divergence on the actual RSI. So there's one top, there's two top, right? And there's the third top right there. Always look for at least two or three. I like to get at least three tops, right? So that's a really good sign for me to sell because it's losing strength. And if we look on here as well on the histogram, we can see it downticking, right? Here, that's not the first top. This is the first top, this is the second top, and this is the third top right there. And then if we look on the next wave going up as well, we can also do the exact same thing where we're getting basically three tops, right? So there's the first top right there, there's the second top right there, and here is like a third top. And when you start to see it bearishly diverge just like this, that's when you know that that could be the top. But if you follow my rule, for example, on which chart were we at? I can't remember exactly. I think it was a 2-hour one at first. No, it wasn't a 2-hour one. It was a 5-minute one maybe. Let me double check this. I'll be right back. Here we go. So this is that rule that I was talking about earlier, right? So right here. So on the second one, the second top that we find over here, if we draw our support for the RSI, that's one support. This is the second support. That is the third support right there. As soon as it breaks it, that's the perfect time to sell. So we can also use RSI as an actual support range as well. Did you guys know that? Pretty cool, right? Now let's look at one more example. I'm actually going to end this tutorial series a little bit short just to give you the one example there. I don't want to overwhelm with too much information there. So that concludes our just small laddering examples of how you can maximize your profit by taking profit at the top and then buying back in if you firmly believe that it is still bullish. And I use it all the time once again, and it makes sure that it reduces my risk, it reduces my exposure in the marketplace as well. And I don't always sell 100% of it. I might only sell 25, 50% of whatever position size I have just to shed off some of that risk. So this is more so an introduction to a more advanced risk management method that I'll be getting to in the future. Now that we've covered the basics of risk management, I also wanted to give an introduction as well to laddering, and it'll give you a really good general idea of when we do start to cover a lot of the more advanced strategies. So if you guys enjoyed this video, make sure you upvote, like, subscribe, blah, 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 blah. Follow